Okay, so there's so many different theories, different rumors about what's going to happen with the stock market. Is there going to be a recession? Is there going to be 10 years of just nothingness? What is going on? Well, as of right now, we can never know what's going to happen in the future. We just don't. We look back in history and we can then say, wow, how could you not see that recession? Or how did you not see whatever happened happening? How could we not see that happening? And to be honest with you, it's just one of those things that you have to look back and say, wow. So today's going to be a video about one of the things that I'm currently seeing that I haven't really seen any stories about, and that is the volume on covered call ETFs. The trading volume is absolutely massive right now. And when we start looking at these different covered call strategies, what is the one thing that they give you? And that is massive yield, whether it be anywhere from 4 and 4.5% all the way up to 12%. And that's kind of concerning in my opinion, because if people start chasing dividends and start chasing yield, and I'm talking about big investors, that tells me that they may be not seeing high growth in other areas of the market, and they are not seeing higher interest rates either, which then gives them the want and desire to go after covered call strategies. So let's really check this out. The first one I'm going to look at is Nationwide Risk Management Income ETF, NUSI. And this has a 7.5% dividend and current average volume of 345,000 shares traded every single day. Its MER is 0.68. Now, it's not been around for very long, but we can see that, of course, the increase in volume of trades. Now, this could just be because this was a new ETF here, and of course, now with the ETF going into the future, it's going to get more trades. That is a possibility. We have to look at both sides of the story. We can't just look at one. However, let's look at QYLD, which is the Global X Nasdaq 100 covered call. This has an 11.8% dividend, and something that we do see is again higher volume in this ETF. When we look at that max chart, which brings us all the way back to 2014, again, higher volume. Upwards of 22 million shares getting traded in a single day. We've been seeing this since the beginning of this pandemic. We've been seeing slow increases in volume into covered call strategies, and to me, that's telling me that there's people, big investors, who are unable to find higher returns in other areas of the market, and they are starting to really funnel into these covered call strategies because of that high volume and that high dividend. If you can't make money on interest and you can't make money on the stock market because it trades sideways, the next best thing is to chase yield, and that's high dividend stocks and high dividend ETFs. Another one is the Global X S&P 500 covered call, XYLD. This one has a 9.5% dividend, and we can see all the way back to 2013 that it's high volume again. Now, the great thing when it comes to this ETF is we can actually see that it's had high volume before. And what's happened when there was high volume before? The market went down for about a year and a half. We've seen this again during the COVID pandemic, the massive downfall. We've seen higher volumes, and now with the increase in the stock market, look at how high this insane volume really is. That is a massive increase, and that's starting to really hit the same level, if not higher volume, than what we've seen just between 2014 and 15. And that's when that market, or when the stock market, was slowly decreasing, or at least trading sideways. Now, what about here in Canada? Are we seeing this too with our ETFs? ZWC as a very good example. Now, this one pays us roughly 7% dividend, even though Yahoo's messing up right now. But either way, when we go to that max chart, we see this once again. Now, of course, this isn't going past 2017 or anything, but we can see that there is higher volumes going into ZWC than what we've seen in the previous many years. We've seen this also in 2020 when there was that big downfall, and we're starting to see it once again. So what is this telling me? This is telling me that maybe a dividend strategy going into the future may be an actual benefit, because if we're not seeing, or if big investors are not seeing potential gains in the stock market going into the future, and we've seen this in history where we've had a lost decade and the stock market literally traded sideways for 10 years, but at least back then they had higher interest rates and people were making, and investors were making more money on interest rates, and that's where they were funneling a lot of their money. Now, when it comes to the stock market and what's happening today, we don't see high interest. We have no interest. Basically, it's a figment of our imagination that there is a thing called interest. Meanwhile, the stock market, if they think that there's no money being made in the stock market and it's trading sideways, that is when you start seeing higher volumes being pushed into higher yield things like covered call option strategies. And when that happens, what you'll be seeing is basically at least some kind of an income coming back to that trader or that investor. And when it comes down to it, that's what I'm currently seeing with these covered call strategies. This is no real guarantee that there's going to be a lost decade or a recession or anything like this, but it is something that is noteworthy and kind of interesting to really look at. I hope that you've enjoyed today's video. I hope it gets you thinking a little bit about the future. And of course, hit that like button, subscribe. Make sure never to trust a random person on YouTube. Do your own research and find interesting things about the stock market yourself as well. I hope that you've enjoyed. I'll see you guys again in my next video.